Good morning, ladies and gentlemen, and welcome to the show. Today is Thursday, the 6th of January, 2022. Can't believe 2022. It's amazing. I remember when I was a kid, our teacher told us to do an essay in school on where will I be in the year 2000. And I didn't do the essay. I should have, but I didn't. But there's a reason why. Is I thought to myself, well, I'll be an old man by the year 2000. And I didn't like the thought of it being an old man, and I wasn't too worried about it, but that's gone and passed, and that's 22 years ago. That was 22 years ago I was an old man, so what am I now? I think it's funny. Anyway, time passes so fast. And wasn't it a more delightful world back then, you know? Anyway, let's get on with what we're going to talk about here a little bit. Let's open up the charts right here and take a look at what's going on. Novogratz sees Bitcoin bottoming around 38,000 to 40,000, and he's waiting to buy. Well, I'm going to tell you what. I see Bitcoin bottoming around 29,000. We're going into a serious episode here. And I'm going to review with you guys just a little bit what I've been talking about lately. I've been on the bond market here. If we take a look at the U.S. 10-year, let's click over to the 10-year here. It's at 1.728 this morning. Now, we were down in here. We were down these lower levels, down below 1.5. And I was telling you guys this is going to creep up. Right? When I said creep up, I didn't mean it was going to shoot up. It shot up. And I'm a little bit surprised that it moved up as fast as what what it did. I thought it was going to creep up over a little bit longer period of time. And I said the marker is 1.75. Well, by gosh, we're getting awfully close to that marker. Well, the markets are starting to turn around a little bit ahead of time, but I got the call correct. My call was very correct with a lot of these other guys out there. I got it. I pretty much nailed it. This is just beginning, guys, because this is going to continue to go up. Well, it's at 1.73 now. I think it's getting nearly done pricing in this first cut. But they're going to make another cut right soon. And let me explain to you guys how government works. Government knows that it's going to create a situation here. They know that they're going to cut, and deflation's going to rear its ugly head, and the markets are going to start to crash. But they do it anyway, because on the other side of this, they know that they're going to have to react to it too, and they're not going to react until they create the crisis that they're going to react to. This is the way government works. Instead of holding the line, because they were forced, well, they needed to do something or appear like they were doing something to counter inflation. And so now they're doing it, and now we're seeing the expected result. Right? Well, on the other side of this, they're going to be expected to prop this system back up. Just as much as they're expected to fight inflation on this side, they're going to have to be expected to prop the system back up on the other side. So what we're looking at is a artificially created dip in everything. Everything's going to start to burst. Housing market's going to start to burst. It's all going to start to burst at a certain point. And when it all starts to burst, how much is it going to go down before they're going to react to it? Well, the first 20% is pretty much a given on everything going down. The first 20%, pretty much a given. It's going to happen real fast. It's coming right now. We're on the front side of it. And then when they get past 20%, that's when the crisis is going to begin on the other side of this that they're going to fight against. 20% is when they're really going to start to get concerned, and it's probably going to fall more than 20% because they're slow. You know how slow they are at reacting too. They have to have meetings and more meetings and it just goes on, but eventually they'll get around to fighting it, and there's just going to be more, and that's when we're really going to see gold and silver, man. And you're going to have your best buying opportunities coming up for cryptos and stuff like that, you know, coming and into the market and everything. Now, what about, let's go back and take a look here at the Dow again. You know what we seen? The Dow's down now this morning, but it started to go up earlier. Let me see if we can get the 1 day here. Oh no, I want the 1 day here. It's 1 month, one minute. Let's try that. I think that's today. We're getting we had a bounce back, a little bounce back, and that was the dip buyers. Dip buyers are getting slaughtered out there today. This is they are so well trained. These dip buyers now, after years of buying the dip, they've been so well trained to buy the dip, and they're going to continue to try to buy the dip. But right now is not the time to be doing that. The Fed is hell-bent for leather. They are out there, and they are going to continue to cut until they can't cut no more, and they can't cut when they've created this situation for themselves. We're going to see it play out. So we're not quite to that marker yet of 1.75 on the U.S. 10-year. We're not quite there. It's 1.73 right now. It's close, but no cigar. And so we might see a little bit of action where this market will stabilize over the next few days. That wouldn't surprise me a bit. And things bounce back a little bit, like gold and silver and cryptos, you know, bounces back a little bit. Let's get in there and take a look at the silver price today. 2207. It's down 71 cents. Now, let's take a look at gold. Gold today is down $20.60. You know, liquidity is going to dry up real quick at this point. And bond yields are rising, and how much harder is it going to make that for people out? Do you know how sensitive the real estate market is to this, to yields rising? Doesn't take very much. That's a huge market. And what's going on with Evergreen over there right now in China? Evergrande. I call them Evergreen. Evergrande over there in China. You know, they're being kind of quiet about it all. But I'm going to tell you guys right now, this is a really big thing unfolding over there in China right now. Property developers are all getting in trouble. And the next thing to come is a lack of sales in properties over there, and property prices being reduced. And they have a $55 trillion real estate industry. It's massive in China. That's where their money is. Well, we're going to see a bust, I think, coming where real estate, I mean, it's just a no-brainer. They were building these giant apartment buildings and selling all the apartments out inside the buildings, and they're not even finished or anything. But they're buying them for investments. But there's millions of them out there, unfinished apartments. It's all a giant Ponzi scheme. And these wealth management products, well, we've seen them all out there in China right now protesting, where's our money, on these wealth management products, which was another Ponzi scheme, and they're supposed to get like up to 12% interest annually on these wealth management. Well, it works fine, guys, as long as real estate's going up. That's how Ponzi works. Now the Ponzi's being broken because real estate prices have leveled off or even starting to go down. What happens then? Then the greater fool theory breaks. So the whole world is in a mess right now. Now in the United States, we're looking at, I think it was 207,000 new claims, jobless claims or whatever. That's a week. That's a week. That's not a month. You know, you add 4 weeks together, you're getting up nearly 1 million jobs lost every month. And so they say, oh, yippee, we've gained 200,000 new jobs, whatever. Yeah, well, you just lost 1 million. The United States economy is cratering. and the actual workforce out there. So what are they going to do? Well, they're going to make some sort of new cryptographic currency and distribute it to all these people who haven't got work. In the end, nobody's going to be working. But not only that, when they create all this money for nothing, money for free, and they start to distribute it out there, everybody's got an account with the Fed, and the CBDC, Central Bank Digital Currency account with the Fed, and the Fed's pumping the money out there. That what you can purchase with that money is going to go down the toilet. So they'll have to keep increasing it. And that means it's going to go ever faster. What's that going to do to savers out there? If you're a saver out there, you know what? You are on the chopping block right now, guy. Or gal. You're on the chopping block if you're a saver. You got money in the bank. Man, I'm going to tell you what. You better get off into something that's not dollar denominated pretty quick and has no counterparty risk. And you're looking at it right here. It'll save you. But not only that, think about this. So here we get this whole CBDC going, and everybody's got an account with the Fed, and they give you some little credit card they give you. It's going to have your money on it. That's how they'll probably start it. They'll give you a card that's linked into your account, with the Fed. And every month the Fed will put money in there. And ever increasing amounts. What starts to happen when no matter how much money they put in there every month, they're not keeping up with inflation still? Well, the people are going to start to go hungry en masse. The people that are reliant upon that system. And what about all the other people out there who have jobs? Well, their pay's not going to keep up either. So that means 100% of the general population, not the little 1% guys out there who are raking it in off of all this, but the general population out there, you, me, everybody else, is going to be descending into a poverty hell. And we're going to be squeezed tighter and tighter until something happens. Now, this process is not going to be overnight. This is going to be something that takes a couple years for it to happen, to where we get to the point where no matter how much money they're sending out with the CBDCs, it's not enough to buy a can of beans. So what happens ultimately in the end? Well, it's up to my audience out there right now to figure it all out. What you have is the less than 1% out there who are benefiting. Smaller, it's actually smaller than 1%. It's a tiny little, heck, you could probably fit them all on a school bus. The ones who are really benefiting big. But then everybody else in the entire system is suffering. So what does this ultimately lead to? Because the ones who are suffering outnumber the ones who are benefiting by, it's astronomical, the amount, right, of the ones who are suffering are going to be this huge army, an army like the grains of sand on the ocean. That's how many. And the ones who are benefiting and sitting up in their ivory towers are going to be a smaller and smaller little group. Well, this is not going to stop. The ones who are suffering are going to suffer more and more and more and more. Be pinched tighter and tighter and tighter. They're like a lemon stuck in the jaws of a vice. And it's going to keep going because that's the way the system is structured. It's going to keep going until it doesn't and it breaks. And can you guys out there guess how it's going to break? Probably within the next 5 years. I'm going to go out a ways. I think it's going to be a lot sooner. But within the next 5 years, it's going to break. Can you guys guess how it's going to break? Anyway, let's move on here. We're going to take a look at cryptos today. And it's 2042. And cryptos has been trying to hang on where gold and silver have been going at 2044. So it is going up just a little tiny bit. But Bitcoin's at 42,930. When this whole thing breaks, now I get you guys to guess how it's going to break, but after it's over, after that's all over, after it breaks and then the whole thing settles itself out, This is when we're going to have the time that I've talked about in my videos, where you're going to have your wastelands and you're going to have your other areas that are still have grid. But this thing can't go any other way. The whole monetary system is set up as an enormous Ponzi scheme. And this is what the Ponzi scheme is doing. It's breaking the middle class to pieces. It's destroying the middle class. And not only the middle class, I'm talking about everyone who's not uber rich. It's destroying. But the uber rich ones, it's lifting them up higher and higher and higher. And, you know, you just can't continue with this. This is unsustainable. And it's going to lead to a break at a certain point. But we're not there yet. That's a ways off into the future when this thing actually does finally break. But when it breaks, it's going to break suddenly. Okay, let's move on here and take a look at the Dow Jones today, and we're going to refresh the page. We're down 59 points on the day so far. The buy the dip guys are out there, and they're in force today, and they're really trying to buy the dip. But, you know, they're going to get broken. Their backs are going to get broken like that. That wrestler. I remember there was a funny wrestler on, I can't remember, he was on YouTube or something, and he was like, I break it your back or something like that. It was funny anyway. I wish I could find a link to that. Maybe I'll put a link to that in the description. Anyway, we're going to move on here and take a look at crude oil today, which is at 79.27. It's up $1.42 on the day so far. Now we're going to take a look at the MOVE index. It's 78.68. Going along sideways. Yeah, well, the dollar's getting stronger, and so the MOVE index should go down. I wouldn't be surprised to see this MOVE index go down, get down around probably 60 or whatever before this is done. Let's take a look. Here's the big story right here in the bonds. What we're seeing is movement to the upside. 1.726 on the U.S. 10-year, and on the U.S. 30 years at 2.1. And they're all up across the board, you know. But I think this is just about priced in, this first cut now. I think it's just about priced in. I think what we're seeing is these bond yields probably just about done pricing in that first cut. But there's another cut coming. 1 month is what we got, the second cut. Now, remember I told you I think the markets get away with the first cut? That's what's happening right now. They've dropped a little bit. Everybody's saying crash, 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 but it's not the crash, not yet. I think we got another month. I think it's going to be the second cut, and that's when it's really going to start to turn everything downwards, really big time, you know. And we're going to see these bounce up higher again. We're probably going to get a U.S. 10-year approaching 2% when this second cut goes in, you know, and the 30-year probably be up around 2.5. Then look out. Look out. But they're not going to stop. See, this is the thing about this. The Fed is not going to stop until they create a crisis. And what kind of crisis, you ask? A crash crisis. Then they will respond to what they created. Why create it in the first place? But see, this is the way government works. They have to create it in order to fix it. It's stupid. They have to wreck something in order to fix it. In other words, if they need a new door, this is the way government works. If they need a new door on their office building or whatever, they won't go and carefully take the door off by the hinges or anything like that. They just wreck the building. Like if they need a new building or whatever, you know, they'll go in and they'll smash the entire building down. And maybe the building only needs renovations. But then they'll erect an entire new building at a great cost. Everything they do is like that. And so right now they got a financial system where everything's up. Keep it up. Don't let it fall. But they're going to do all this action to make it fall. And then when they demolish it, then they're going to try to rebuild it back again with more money. This creates buying opportunities for you guys. Look at the silver price today. Look at it go down. That's a buy. Well, that's gold. But gold or silver doesn't matter. Look at the price go down on this. It's 22.03 today. Even with your premiums, you're still going to see a discount on the price. Okay. Now we're going to take a look at the US dollar index at 96.14, and it's going along sideways, but it has bounced a little bit, maintaining in around 96. Thank you guys for listening to my show. You know what to expect if you're watching my show. You're not surprised by any of this because I've been telling you it's coming here and pointing it out to you exactly what's causing it and when it's going to come, and I'm practically spot on how it's playing out. And I've been telling you guys that this is not, I don't think this is the big crash just yet. It's going to come after the second cut. We're only on the first cut. It's a month between cuts. So I think that this whole thing is just, this episode I think is just about stabilized now. And we might see things bounce back a little bit because they've priced things in. And we're still under that 1.75 on the US 10-year, which means that the system can bounce back some. It's when they price in that second cut in 1 month from now that we're going to see these bond yields go too high for the markets to hang on. Well, basically it's like this. The Fed's just going to keep... Picture a guy that's hanging on the edge of a cliff, you know, and you got some maniac up there who's stepping on his fingers. And I'm watching the fingers, and I'm saying to myself, how many fingers can they step on before he loses grip and falls? Well, that's the market. That's the market. Market's going to fall. How many fingers can the Fed step on? Well, they're stepping on his pinky right now. And he's slipping just a little bit, but he's probably going to still be able to hang on. Next is going to be to step on his next finger. And how many fingers is before the markets slip and fall? But they're going to keep going. They're going to keep going until they've run a steamroller over all the fingers. That's the Fed. And so I know what this is going to end. I know how this is going to end before it starts. Because they're going to keep going until they break it. I remember, you know, like making a campfire and stuff. I was at this state park or whatever one time. And getting some campfire wood and stuff, and there was this long stick or whatever, and I tried to break it, and I was sitting on the picnic bench, and I was bending it. It's like, when is this thing gonna break? And I was bending it, twisting it, and it's just about into a knot before finally it went snap. That's what the markets can be like when they really want to go up. But the Fed's determined to break them, and they're going to keep going until that stick snaps. Now, I'm predicting after the second cut, but heck, they might get to the third cut. We'll just have to wait and see. But they're going to keep, the point is I'm making is they're going to keep cutting until they break it. So they got this plan by, I think, March. They're going to be done with these cuts that soon. And then they're going to start raising interest rates. And they're going to keep going until it breaks. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the very next show. Bye-bye.